Hey, welcome to the Amazon FBA cash flow video, where me and Orion Avidan, who's an inventory balancing expert, are going to help you leverage your inventory into actual profits on Amazon. So Orion, please introduce yourself to us. Tell us about yourself, please.
Hey, Baba. Thank you so much. It's great to be here on the call with you today. As you said, my name is Orion, and I operate Retail Adventure. We help e-commerce brands improve their cash flow 50% in 30 days through the smart inventory balancing system. I got into e-commerce from actual brick and mortar retail. I've been learning inventory balancing and inventory flow for over 10 years now. Really love the subject, and I actually got into retail by working in a shop as a salesperson in order to check what I've been learning, in order to make sure that it's not just a theory, it's actually having the impacts that I'm being taught, the logic that I'm being given and accepting is true. I actually tested it out. And I've worked in apparel retail in Israel. And then I realized that I would much rather work in e-commerce because e-commerce has data. And I'm an engineer, I love data. And that's how I moved into e-commerce. I've been working with sellers on Amazon, Shopify, different platforms for 3-4 years now. And it's really, really exciting to do that. What I have seen is that the biggest issue is understanding cash flow, because if you don't know what impacts your cash flow, you don't know how the decisions you're taking are impacting your business.
Yeah, and as an Amazon seller, I gotta tell you, actually, we gotta be open with the audience here. We gotta disconnect it from the previous call, the lag. So we pretty much stopped in the same point where I said that as a seller, to this day, like 4 years selling, still have problems and understanding of cash flow and inventory management. Okay, so I have, for example, as we talked on another day on the call, money in inventory, and I have maybe even revenues, but bottom line profit to my bank account might not be what I'm expecting. So this is something I'm learning and trying to improve all the time. And so I'm happy that you're here today with us to share it with the community, because many people struggle with these specific things. If we're not getting deep inside Amazon, we're doing PPC and all the listings. That's inside, that's something else. But the big thing is actually the inventory management and cash flow, because we want to make money as well from this business. So I'm happy to pick your brain today on this.
Yeah, I totally understand what you're saying. I have to tell you that even big companies that have been around for a long time struggle with these exact same things. So we're in good company. And cash flow and inventory aren't two separate problems. They're basically the same problem for e-commerce, because most of your cash flow impact comes from your inventory. It's not only your biggest expense, it's also your longest cash to cash cycle process. And we can talk about it. I'll just say in one word, 3 words, just the name, cash to cash cycle is the time it takes from the moment money goes out of your pocket until it comes back into your pocket on average.
I see.
And cash to cash cycle can be negative, which is really cool. It means you get the money before you pay it. Cool. Amazon has a negative cash to cash cycle. And that's why they are actually very profitable. Their profitability isn't sky high, but the fact that they get paid before they have to pay. And sellers are a big part of that. Just the fact that you make money for Amazon 21 days before, on average, before you get money from Amazon, that's negative 21 days to their cash to cash calculation. They also sell stuff that they don't need to pay for in advance on their own, like AWS services. Some of that is negative cash to cash as well. Sellers who are sourcing from China, for example, have a cash to cash cycle of 120 to 200 days positive. And that's where the cash flow impact is so big because for 120, even 200 days, your cash is busy doing something else, as not available to you.
Yeah, in the inventory sitting, and that's
It's
you understand. It's positive means that, for example, I mean, negative means that, for example, that's what happens with Amazon and not with sellers. We sell and they get money based on that, and they pay us afterwards, as you mentioned. What it takes, like 3 weeks usually, right? 2 weeks, 3 weeks. So we're not in the good position.
so for cash to cash cycle, negative is good, positive is bad.
Yeah, yeah. And we're on the bad side as sellers. So how do we
look? It's not the end of the world, but the longer your cash to cash cycle, the harder it is for you to turn your cash. Now, here's a simple thing. If you take $10 and you start turning them, let's say you turn them in 1 week. At the end of the first week, you have your $10 back and then some. You reinvest. You can do that reinvestment 52 times in a year because your cash to cash cycle is a week. Now you always make a profit, and let's say you only make 10% profit. After 10 weeks, you take your initial $10 out, put them in the bank, and you keep the business going because you have a new $10. You're fully paid on your investment. Let's say now you want to do something big. You find a supplier who can give you that same thing for $1, but it will take you a month to get it. You buy 10 units of those. You wait a month and then you turn them. So your cash to cash cycle now is 5 weeks. You will only be able to turn your cash, let's say 4 weeks, you will only be able to turn your cash 12 times in a year.
Yeah.
And it will take you longer to get the money back into your bank account.
That's right.
So even if you pay more, but you shorten the time period your money is busy, I can show you mathematically, you'll make more money. Of course, it's a matter of proportions. If I spend $1 million to make a fast cash to cash cycle versus $10 for a slower cash to cash cycle, they're worth $10.
Yeah.
But when it's in the logical proportions of the market, I mean, how many suppliers will give you 50% discount for buying in bulk? And anything that is not as good as 50%, my initial estimation would say ballpark, if you don't get the 50% plus discount, pay more to spend less. So it's just like going to the supermarket. I need a bottle of detergent. I'm going to use this detergent for the entire year. When this one ends, I'll buy another one and another one and another one. The supermarket has a 3 for 2 deal. I know that a bottle lasts me a month. So if I take the deal now, I will pay a third less on 3 bottles. That's 3 months. I've made a nice discount on my detergent. But I spend more money today than I would have today buying just the one. I spent twice as much. My cash flow is 100% lower on detergents. And I need more space to store that inventory. Now, okay, I have space at home, but maybe next week there is a better deal on washing the tablets for the dishwasher.
All right.
I don't have the space, I don't have the money to do that deal.
I see what you mean.
And the money itself costs us money. I paid 2 times the cost for my detergent for the month. And if I did it on the credit card company is going to be really happy because I'm paying interest. on the expense. So I'm paying more for inventory because I have less space at home. I'm paying more for handling. I have to do more stuff right now. I have to carry more stuff from the supermarket back home. I am losing any opportunity that will come my way because I don't have the money. It's busy. And I didn't get anything of value right now. The value I get is in the future.
Yeah.
In 2 months' time, I will get to that free bottle. What happens if during those 2 months, my mother comes to me and says, Orion, you must try this new detergent. It cleans 3 times as good as any other, and it costs less money. I said, I've got detergent for 3 months. I'm not going to try the new detergent for another 2 or 3 months. So I'm better off buying one for full price.
I see what you mean.
And it's the same exact logic in retail and in e-commerce. One of the things I really love about managing through cash flow is that it's day-to-day logic. We learn to manage our business from a profit and loss perspective. Now, there's something really important to understand about profit and loss. It has accounting requirements built into it. And accounting has been created and is used for tax reasons. So the logic for accounting is the logic of the treasury. How do I calculate your tax so I get paid? Now, I know you do your calculations through your accountant, but the body that dictated, how is that calculated, is the treasuries of the countries. And their point of view is, we want the most amount of money outside of your business, inside our treasury.
That's right.
They are not aligned with your goals and needs as a business owner.
Yep.
So when you go and you say, I'll use the profit and loss, you have to have it to change to a managerial profit and loss. And rarely people do it. Nobody talks about it.
Managerial, you said?
Yes.
Okay.
Take all those tax considerations out and make it look more like the way you manage your purse in the supermarket as a person. We manage our day-to-day finances from a managerial point of view. We are the managers of our houses.
I see.
And we do it very well. It's very easy and logical to do that.
That's true.
And it's not easy and logical to do the managerial accounting of the business because we are given the wrong data. Just one example, which is the one that drives me nuts because it's inventory. In your profit and loss, where does your inventory come to play?
What do you mean? Where does it come to play?
You have inventory right now. You have money in inventory. Does it show up in your profit and loss?
Well, once it's calculated, you mean? I'm not sure if I understand the question. Like, so I have inventory right now sitting on Amazon, right? And then you have like profit and loss statement, you mean like yearly or monthly?
Yes. Okay, you get, as a person, my revenue is my salary. I say I have a job. I get a salary. That's my income. That's akin to the revenue of the shop. Then I have my expenses. And at the bottom, what do I have? I have my profit, my real,
left. Yeah.
Whatever's left, that's my money. We call that in business profit.
I see.
Now, if I go to the supermarket and I spend $100, I put minus $100 in my list to calculate my money.
Yeah.
When we do our profit and loss and we have inventory, do we put minus this amount of money in inventory in the profit and loss?
You mean for example, the Amazon fee, for example, for the inventory that's sitting there? or
No,
specifically the inventory that we've invested in that
the
sits there every month?
inventory that you have invested in. Right now you have $1,000 that you spent and it's still in inventory. It's not in your profit and loss at all.
I see what you mean.
Profit and loss only counts the inventory you sold.
You saw, yeah.
That's COGS, cost of goods sold. The rest of the inventory is in your balance sheet as an asset because you're supposed to keep selling them. So it's equivalent to money.
Yeah.
Two problems with that. One is that when you then do your calculation, revenue minus COGS minus expenses to Amazon, expenses outside of Amazon, you get a profit, but that money isn't in the bank, it's in the inventory.
Yes.
And I've seen benchmarks and it's absolutely that. You get a 10% profit and a 10% annual revenue is always in inventory. Is your inventory cost average. So all that money that you think you've made and you say, oh, I've made a profit, let's go to vacation this year. I'll show the wife that I'm doing good, or I'll show the husband that I'm doing good. And you go to the bank and it's flat because your money's in the inventory. That's one problem. And the other problem is that it is considered an asset. So money that you are going to make, but inventory ages really, really fast. If you did not sell it within the first period that you were planning to sell it, it will not turn into the profit that you were expecting. It's just not moving fast enough.
So how do we overcome this? We need to have shorter, for example, lead times with suppliers. We need to have faster sales, or like, I mean, which kind of makes sense, but.
So let's go back to cash cycle. Cash to cash is basically made up of 3 different time periods. It's the time between you pay the supplier and you get the inventory. That's your supply time. It's the time it takes you to sell that inventory. That's your sales time. And it's the time it takes you to get paid. It's a payment time. And we want to shorten all of them, of course, because we would like to be below 0. So what we can do on supply time is shorten the supply time. And a lot of sellers that I talk to say, but I can't, that's the supplier's terms. Well, first of all, the supplier is a person too, and he has a business too. And just like you can change because it's to your benefit, he can change because it's to his benefit. But the key word here is his benefit. We're not big enough like Amazon. Amazon can come to your supplier and say, 1 million units, I'll pay you in 6 months. And he'll say yes.
Yeah.
You can't, but there are a lot of things that the sellers are doing that would benefit them to change. And we can communicate with them to get there. And you're going to say it's hard, and you're right, and that's why it's not the first thing that we do. There are ways we can virtually shrink the supply time by changing the way we order, by changing the way we manage ourselves within this situation. And the next thing we can do is we can make our orders smaller and more frequent, so that just by saying, instead of ordering the entire quarter, I'll order every 2 weeks, I get 2 weeks delay in the cash flow, in the negative cash flow of a significant amount.
It's all right. More people to the inventory management party. Why not?
So just let's say instead of doing one big 90-day order,
yes,
I do small 14 days order. The first time I order, instead of going 90 days into the red, I go only 14 days into the red. I'm left in the bank with, okay, now I have to do 90 minus 14. That's 76 days.
Yeah. That's right.
That's 76 days. So if, let's say, a day worth of inventory is $1,000, I don't have to spend $76,000 right now. And mind you, I won't have to spend them in 2 weeks' time either, because in 2 weeks' time, I will do another $14,000 and then another $14,000. And that, just that could be the difference between needing a loan and not needing a loan, because during those 14 days, if you're already established as a seller, you will have an income. Now, the other thing we can do is we can discuss payment terms with our supplier. So for cash to cash, the question is not when do you order, it's when do you pay. So if you have a payment terms that says invoice plus 45 days, you're better off than if you have to pay at invoice. Now, I don't know a lot of suppliers that will give you invoice plus 45 days. They need a down payment to buy the raw materials to make your stuff. And here's another point of view on the situation. The bigger your order, the higher their risk is. Because the risk is not in the down payment. Down payments is 10–20%. It's usually very manageable. And what happens is when we don't know our cash flow, is that we say, oh, no problem. I'll have the sales when the time comes to pay the next payment. But usually the way terms are set up, you pay 100% before you get the first unit.
Before you get the first unit sale, you mean?
Before you get the first unit of this order on the shelf, you can't sell.
Yeah, of course,
you can't sell it, so you can't sell it. So of course, it's not going to have a sale. If you can work the terms with them, so that you'll have the inventory on the shelf before you pay at least some of the money, you will have a chance to make that inventory pay for itself, at least some.
Yes,
but with the terms set up, let's say down payment and the next thing is 45 days or 60 days later, and you have a 90-day supply time, you have to churn up 100% of this money before you start selling. And you need to be ready for this. Now, if you start looking at this clearly and knowing these numbers and these time frames, you can plan ahead and say, okay, I need to go to the bank and get a loan, or I need to go to a financing institution and get a loan. But instead of getting a small loan for this order, and then next time a small loan for that order, and then next time a small loan for that order, you get a big loan. And there is a saying that I've heard is that if you want to go and get a loan from the bank, get the biggest loan you can, because you'll get the best terms. The banks will kill you, strangle you with terms and securities and high interest rate and everything for a $50,000 rate. But if you want a $50 million rate, the red carpet is out, you get the champagne glasses, and you can do whatever you want. Of course, you have to pay it back.
Yeah. And Orion, I understand. But for example, let's take a new seller that just starts Amazon, because a lot of the people who are watching, they tend to be also new sellers. They can't really, I mean, they can negotiate terms with their supplier, but maybe I'm not that good at negotiating, but it would be very hard to find a new supplier that would give you these special kind of terms. Usually it would be like 30-70, 30% down payment, 70% once the inventory is ready. So I believe what you were saying is more once you establish a relationship, right? Then you want to, of course, you want to try it from the first order if you can, if you know how to negotiate, and you can have some credibility to show.
Of course. So there's three things I would recommend for that situation. One is look for middlemen. So there is power in numbers. If you have a middleman or create a group of sellers that work together to get suppliers to create a volume. So I know a couple of companies that do inventory financing where one of them is in the Far East. What their model is, they will buy the inventory for you and then help you flow it out. They buy for you, and they are creating a big buyer base because they're buying for a lot of sellers. So when they onboard a new supplier, they come in looking big, and they can get better terms. But as I said before, we have things we can do on our side that you can do from the beginning to create that virtual shortening. And simply, when you're starting out smaller and faster. It's so tempting, and I know some courses even teach this. Okay, do your research, Helium 10 or Scubana, or I don't know which tools are the best for doing the research, or have somebody, a VA, do the research for you. Come up with one item that you're sure is going to be a really good hit, and buy 5,000 units. Why? Because it's much cheaper per unit than to buy 200 units.
Which makes sense, but
if you buy 500 units and then it turns out you suck at Amazon, like I probably would be at the front end, which is why I'm not doing it. So you buy 5,000 units and it's not at half price. It's a good reduction, maybe 70%. And you only sell 200 units because your research was off or something changed between the moment you finished your research and got that item to the market. Just a big possibility is that just like you, 7 other sellers did the same research. 2 of them finished first and they were not you. They got to the market first with their 5,000 and 5,000 units, and now the market is swamped. They're not interested in you anymore. So you were right every step of the way. You were just late. And you bought 5,000 units because per unit it cost significantly less than buying 200. But at a total order, 200 costs significantly less than 5,000.
And you get stuck with a bunch of inventory.
And you get stuck with a bunch of inventory. So you lost everything.
Yeah.
If instead you say, I'm willing to pay more to get more.
Okay.
And what you want is not to get more units, you want to get more money in the bank. So I'll buy the 200 to test the market, but I'll also ask the supplier to give me faster production time. And I'll pay for air shipment because shipping air 200 units is not too bad. Yes, it's more expensive, but I'll get it to the market first, way before everybody else. And if it's good, 5 days after I start and I see the 200 is going like hot potatoes, I call the supplier and say 400. You really have to keep your focus on not stocking out.
That's true.
But 200 units didn't put me in the red as bad as 5,000 units. So I can do the upgrades and I can do the next order. And if it didn't go so well, I can do the next 200 on a new item.
Yeah, yeah.
And so I've lowered my risk significantly. I can shorten my supply times by paying for it. And here's something a lot of sellers don't know. For a lot of items, the production time is proportional to the size of the order.
Which means more will take more.
More take more production time. Now, most of the time your order is in production, it's doing nothing. It's in wait time. The statistics in manufacturing is about 90%, 10%. 90% waiting times, 10% production times.
I did not know that. Interesting.
No, not a lot. I'm an industrial engineer. That's what I do.
Nice. This is
But it's extremely logical if you think about it. In the supermarket, before all the robots and stuff, when you had to wait for the cashier is a production process.
yeah.
What do you do most of the time in the production process of getting your bill? You wait.
Wait. Yeah.
You wait for the people in front of you to get the process done. And if I look at an item in your buggy, in your cart, they need to get through the production process of getting scanned. That's the process. So when your order hits the cashier, you have 50 items. Each one of them takes a second, right?
Mm-hmm.
But they wait the other 10 minutes for the other items.
Mm-hmm.
So most of the time in production is wait time. The smaller your order, the less production time it has. And it should have less waiting times because the internal wait, one item in the order waiting for the others, is smaller.
Mm-hmm.
And another thing is the supplier could find opportunity times. Let's say I have a big order for a client and it doesn't take a full day of work. Some of the stations that need to work on it only need 8 out of the 9 hours.
Mm-hmm.
I won't start a new big order today or on this shift, or the new big order isn't ready yet because it's stuck. What they do is they batch. They do everything and then they move it for the next station.
Mm-hmm. Mm.
So if the next batch is not ready, a station could be free. And these little orders can just snuggle in between. It depends on the flexibility and willingness of the supplier to do these things. And of course, it's easier when you have a better relationship. And it's also easier when the supplier is closer. Now, if we just said we're going to make small orders and pay premium to have them fast because we saved a lot of cash. We freed up a lot of cash by not making big orders. Why not pay that premium for a supplier close by, for local sourcing?
In order to ship it faster, you mean? In order to have
If
it
you
faster
have,
in the place of selling. That's
yes, of course, just by finding a local supplier, if he has exactly the same terms as China, you'll cut your supply time by about half.
Yes.
Because then instead of having the entire manufacturing time plus time waiting for the ship, custom, blah, blah,
A lot of time.
you'll have the entire manufacturing time plus truck.
Yeah.
Which is a few days.
A few days.
Now, when you're talking to China, they want the second part of the payment at the gate.
Yes.
And you have no reason to negotiate 5 or 10 days after that in payment terms because it doesn't make any difference. You won't have the inventory anyway. But for a local supplier, if you can say, okay, the second payment should be invoiced at the gate of the factory, but my payment terms are 20 days. You'll have about 10 days of sales on that shipment before you have to pay it.
So that means you will pay it after the 70%, say you'll pay it once it's already selling, right? That's what I understand. I've never negotiated this way. I never even knew that, I mean, how to say, because you mentioned courses beforehand. So when I learned Amazon FBA in 16, it was only 30-70, like pay, and then ship. I wasn't even really aware that, you know, you couldn't negotiate such a thing.
The amount of things you can negotiate is incredible.
Actually, it's yeah, exactly.
The easiest thing to negotiate are not money.
What do you mean?
So I've worked with several sellers who negotiated all kinds of things with their suppliers, and we usually didn't touch payment terms. but instead we asked to do a big order with small shipments. And the supplier held the inventory on site and didn't get paid for it until it shipped.
Yeah, that's what one of my suppliers proposed to me. He said, order 5,000 units, pay me 20%, and once you need 500 units, pay me for them, I'll ship. And the other one, don't pay me now.
That is half-baked solution. Here's the thing. There is always a deadline for paying for everything. He will not hold your inventory forever. Without payment.
Yeah, true.
And you do have to commit to certain inventory very early. I much prefer working with factories who are willing to say, let's create terms and we will manufacture what you need every week or every 2 weeks. I don't want them to hold on to inventory that I don't need. I'll need to pay for it one day or another.
Yeah.
So the experience I've had with Chinese manufacturers through clients of mine is that they're very set in their ways. And they will negotiate terms with you. And we did get, for example, better payment terms from suppliers when the client was a big client of theirs. But there are a lot of things that's the way it's going to be, and that's the way it's going to be. There is nothing to discuss about it.
Yeah.
For example, if you talk to them and ask them not to batch your orders, that's the way it's done. Even though it can be done differently, that's how they do things, and that's it. And that is another benefit of local sourcing. When you can walk into the factory and shake the hand of the managers and talk to the operations manager, not just to the boss, to the operations manager, to the quality control manager, and they know you, and you take them out for lunch. It's not about bribery or anything.
Yeah, establish your relationship.
Communication works better when you look people in the eye, not through Zoom. 100%. I cannot explain it. I'll tell you just a story. I worked for an employer in the past. We had a project supplied from Holland, the Netherlands. I was back and forth in emails with those guys for a month, and it was stuck. Like, it wasn't moving anywhere. They didn't understand me, and I didn't understand them, and I knew nothing was happening. And then they came to visit us to see the room where the machine is going to be. And we talked for 2 hours. And from then on, it ran, first of all, like silly little misunderstandings. Israeli math depiction says you put a comma between the thousands and the hundreds and a period between the full numbers and the decimals. Okay. So you have a decimal point. Some places in Europe use the comma for the decimal and the point for the thousands.
Really? That's a good point.
And I was looking at there and I didn't know that. It's that simple. I didn't know this little cultural thing.
Yeah.
And I was looking at their numbers and their numbers never worked out to me until we sat down and talked and they said 1,732. Oh, that's the point and that's the comma. Oh, and I could do my work. That's what the power of being able to visit with your supplier. And I know you go to China, but you do it, once a year, and then you speak with the manager, the head honcho, through a translator. Hopefully that translator knows good English.
Yeah.
It's not the same as going an hour's drive away and saying, hey, Joe, what's up? I'm on the way for vacation and wanted the kids to see your factory. Can we do a quick tour?
Yeah, that's awesome, of course.
And I know the focus is I need to source the cheapest unit because then, I buy it for 2, I sell it for 20, Amazon takes its cut. I need to pay for the thing. I need to pay for PPC. I have my costs. I have my taxes. I'm left with
in 8, 10.
Bottom line profit on that item would be about $2 after everything at the end of the year. That's one of the other problems I see with Amazon sellers, is that you're using mid-calculation profits.
I see what you mean.
So
Yeah.
I sold an item for $20. It cost me COGS plus shipping $3. So my operational profitability will be $17.
Yes.
That is accounting. Now you won't see $17 in your bank account because Amazon is going to take about $9 of the 20.
Yeah.
So I have $9 for Amazon, $3 for the product and shipping. I've got $9 now. That's what gets into your bank. Unless, of course, you also paid Amazon for PPC. So we're at $8.
All right, say.
But you also have your own expenses. You have to pay your salary. People, pay yourself first. Have that as a steady expense in your business. There is no other way you'll get to pay yourself. You can't pay yourselves out of the profit.
Profits.
If you don't plan your business to pay for you, it will never pay for you. Just like you plan to pay for your agency, for your accountant, for your graphic designer, plan to pay yourself. So from that $8, you need to do some kind of overhead expense. I'm not going to go into this today. There is a big issue with doing overhead expenses as a costing mechanism. So don't plan your prices using overhead expenses. Using overhead expenses says each item has to cover about, let's say, $3 of the expenses I have throughout the year.
Okay.
That are not item specific.
Mm-hmm.
But we'll put that aside. We can do a different call if people really want. So people vote. Yeah, respond below if you want me to talk about overhead and how that is really throwing you off.
Overhead, do you mean like softwares for paying for things that are not connected to the item itself?
Yes. Things you're gonna pay for even if you don't sell one unit.
Exactly, yeah.
That's called overhead. Mm-hmm. And in business school, in accounting school, they teach you how to divide that overhead and create a non-fixed cost from it. So we say each item has to pay 30% of the selling price is for overhead, like it's changing cost. If I don't sell a unit, I do have to explain this a little bit. You seem so confused.
No, I'm calculating it in my head to my own business and trying to understand. But yeah, so could you give it to?
When we sell inventory, we have totally variable costs. Those are the costs that are per item. If I don't sell a unit, I don't have to spend money to buy it. I don't have to pay Amazon for selling it. Mm-hmm. But there are non-variable costs, so fixed costs. If a unit sits in inventory, I have to pay Amazon for storage whether I sold it or not. Mm-hmm. I have to pay the graphic designer whether I sold it or not. I have to pay the software suppliers my monthly fee whether I sold something or not. Now, calculating your costs, the totally variable costs are very easy to understand. I paid $3 for this unit. Mm-hmm. I paid Amazon $7 for this unit for handling and for its seller services. Those are per unit costs. The other things that are not per unit costs, how do I know how much this unit has to contribute
to that?
To that. Mm-hmm. And what was developed is overhead costing. We will distribute the overhead equally between all the units. Now, the problem is it's all the units we bought. Mm-hmm. And each one of them will cover its own little cost. And that will become a variable cost instead of a fixed cost. That creates a huge distortion in cost decision making. And if anybody wants to understand more about that, I think we should do it on a different video. Plug. But what happens is that you get the feeling that there is a real fair price, what is called cost plus. I need to cover my cost plus some kind of reasonable profit, and here's a fair price. And that will lead you to make wrong decisions. I really don't want to get too down deep into it right now.
No, that's actually pretty cool because we're all paying for softwares and graphic designers. You know what I mean?
Here's the thing. There is no good managerial way to figure out how much does this unit need to pay for graphic design. You shouldn't be doing it at all when you're costing. Now, when you're analyzing your business in retrospect, and we were talking about how much money do I have left from selling this for $20?
Yeah.
Here we can do this kind of overhead calculation. So we were saying we have $20, then we gave Amazon $9, we paid for the item itself $3, and we did some PPC, so we are at
8 left, what we mentioned before.
7 left.
7 left, say, yeah.
Okay, now overhead will take about 3 more. So we are at 4, and taxes, I'll venture a guess of 50%. So you're left with $2, just like I said.
Yeah, I see what you mean.
So when people are telling me
eye-opening stuff today.
I'm profitable,
Really?
you know, I sell for this and I'm left with that, I'm like, what are you calculating first?
Yeah, wow.
Is it pre-tax? Did you take into account that you have fixed costs? People in the Amazon space don't know how to do that very well. And it's not surprising, it's not easy to do that. I know a lot of managers in regular businesses that don't really know how to do that. And they just say they have an accountant or they have a CFO and they say, okay, I want the monthly report, what's my profitability? And the accountant or the CFO will do that from an accounting standpoint, and that will not give you the correct managerial number.
Wow, very Orion. Thank you for all the inputs. It's very open.
I'm just pouring it on you.
I'm excited because I need to improve my own Amazon game. So you know, it's really good to know. And I have no background in. I never went to uni. I used to be a coastal lifeguard actually before I became an Amazon seller. So you know, I can save a person, but not necessarily run my inventory, right? So I learn constantly. Over these 4 years, I've been really learning this, and this is exciting. And I know that you also have the 30-day challenge you mentioned. Can you tell us about this a little bit for inventory management and cash flow kind of thing?
Yeah, so the 30-day inventory cash flow challenge is going to be focused specifically on your cash flow. Now, as I said, for Amazon sellers, for e-commerce sellers, inventory is your cash flow because everything else is really, really simple.
Yep.
So we're going to go through 3 easy steps, and you're going to have a task every day. You're going to have a secret Facebook group where you can come in, get your task, get the videos that I make explaining everything. So everything technical will be in a step-by-step video where I show you what file to open, what Amazon page to open, what to download, how to open it, how to manipulate it so you have the right data. One of the biggest problems with Amazon is if you don't have the API and somebody who knows how to manipulate that, your data is not handed over in a very easy to consume way.
Okay.
But I'm an Excel whiz. I'll take you through the steps, how to take monthly reports into an annual data, all the things you need, very step by step. We'll have Zoom calls so you can all ask me the questions and we can do hot sits to get people moving. Every day you have a task to do, so I try to make it very, very small tasks. Sometimes it's just get the data, the next day manipulate the data so you have the analysis. The last day we'll do reading the results and understanding, okay, so what does this mean for your business? And we will go through mapping. We'll just download everything and create a ton of analysis and maps And we'll talk about your seasonality. We'll talk about the level of in-stock inventory that you have on average. We'll talk about what items are good sellers and who are your best sellers, who are your medium sellers, your velocities, everything. So we have a real clear understanding of your business. Everybody knows their business, and I always surprise them. So there's still a lot to learn. And we'll end with a cash flow cycle for an order. What does your cash flow cycle for an order look like? You start by ordering, you put in the money, you get it, you sell it, you get the money back, but you also have your fixed costs, etc., etc. How does it look? When do you start being positive cash flow on an order? How much money do you have at the end of an order? And for one order, the bottom line of the order and profitability of the order, the bottom line cash flow and profitability actually are one and the same. The difference is in the process, because profitability says everything happens at once. Cash flow accepts the fact that things happen when they happen. Once we have this understanding, this mapping, we can go into the clean phase. Looking at all that data, we will find places that you have cash stuck in.
Okay.
Whether it's an error, something defined wrong on Amazon. I just worked with a client. I was looking through her data, and we found out she suspects they registered her centimeter dimensions in inches.
Wow.
So a regular sized item immediately became an oversized item. Totally different cost structure.
Yeah.
And going into Q4, if you have stock limitations, those limitations are mostly impacting oversized items. And at $10 a square foot, this error is major.
Major, yes.
So just by cleaning up your data, collecting it, mapping it, analyzing it, we will find places where Amazon is bleeding you and it's total waste. You're not getting value for that. But there are other things we're going to look at. We're going to look at your inventory and check what items are slow moving and are actually just too much. You just have too much and you're paying too much for them, and they don't have the potential. There's really nothing waiting for them.
Mm-hmm.
And this is a really good time to do this because we're on the start of Q4 with Prime Day and with Black Friday, Cyber Monday, and all the great big carnival of sales. It's a really good time to know which of your items are slow sellers and what type of items they are, because not all slow sellers are created equal. Not all over inventory is created equal. Just here, another example, if we analyze your inventory and you have a summer item and it's overstocked in October, I am not going to tell you to put it on a 50% sale to try and get rid of it. It's off season. You should have finished it at the end of the season, but not having done that, right now the good thing to do with this item is to sit and wait. Because if it was, let's say it was a good seller on the season, in 3 months' time, as soon as spring breaks out, we can sell it out for 20% discount instead of 50% discount. And we will probably cover the fees for storing it this time.
Interesting.
And then some. And of course, this is all a numbers game. I don't argue with numbers. You bring me an item that behaves exactly opposite than what I explained here, it's possible. I won't be insulted.
Yeah.
I know that most items behave this way, but there are items that behave differently. So we always, always, always do the numbers. Okay, I have this amount of inventory. It will cost me this amount to store it until March when I want to put it to start pushing it on a PPC campaign. And that will cost me this, or I can do it now at 50% discount. This is the money, costs versus revenue for this. This is costs versus revenue for that. Just go for the one that comes up bigger.
Makes sense.
So there are places where we can often find hidden money. in your process. One of them is mistakes on Amazon. One of them is your inventory, your slow moving inventory. And the final one is inventory storage. Really drilling down into the way you do storage. How much do you store at Amazon? How much do you store outside of Amazon if you do? What is this fee structure to make sure that you're doing it in the most efficient way and not paying where you shouldn't be paying?
So in the 30-day challenge, you will walk people step by step every day.
And we're only at day 20.
Yeah, all right.
Yeah,
I see what you mean.
the last part is, this is all good and nice and incredible, but this is all one-time benefit for you.
Yeah.
We'll do the mapping, you'll have the map, but 30 days down the line, the data will be different. We'll find the inventory, we'll find the cash that is hidden in different places, and we'll free it up. But then if you continue working like you worked in the past, it'll get stuck again. You'll know how to do this repeatedly, but we want something better. We want to do better and not get things happen like that.
How?
And this is what we do in the third part, and that is create your cash flow steering wheel. We want to give you the tools to manage your business from the cash flow instead of from the profit and loss. So when you look at a decision, you don't just say it's $2 out versus $10 in. You say it's $2 out for 75 days to get $10, or I can do $5 out for 15 days to get $7. Actually, I prefer the second choice. And so the last part is building that tool where you look at your goals for the short term, at the things you're planning to do, and you create your own tool to run decisions by and have better decision-making capacity. And this is all we do. That 30 days, that's all you can do. We're not going to look into how to manage your inventory, how to do new products. At the end of those 30 days, there is a possibility for those who are ready to move on to doing operations and taking your business even to the next level.
I see. Pretty awesome. I'm going to have the link to this challenge down description. That's not an affiliate link. That's just a link to Orion services. Right. If we'll ever do an affiliate partnership, I'll disclose it in the description. However, it's not. But as you've already, for the listeners who are listening, pretty mind blown probably as I am, because this gives me many new perspectives on things that I was looking at before. And it seems that probably it was not the best way to look at them. I wouldn't say it was wrong, but it's just not the best way. Now I'm getting new perspectives, and it's eye-opening. I'm gonna go through the video again to sync it up. Yeah. So it's exciting. And yeah, Orion, would you want to add any more stuff about this topic or about your challenge or generally?
Yeah, but I don't think we have enough time, because I can talk about this for like 7, 8, 9 days. Non-stop.
So I would be glad to have you here again. We'll find another topic or something to cover. That would be awesome. And for the viewers,
I'll remind the viewers, we asked you if you want to talk about overhead calculations and how to do costing. We will do that.
Drop a comment. We're gonna do that.
Yeah,
we might do that even if you don't drop a comment, but
don't tell them.
It's better. Yeah, it could be nice, and like the video as well to help us move in the algorithm as well. And if we'll ever do any other videos with Orion, we're gonna have them down in the description as well to check them out, to learn more. This way you can hop to another video. And yeah, Orion, I really appreciate it. It was really fun. Really, it was nice.
I loved it.
I've learned a lot. And yeah, we're just gonna be glad to see her again, to blow our minds again with awesome stuff. Thank you.
Yeah. Okay. Thank you so much, Baba. It was extremely fun, and you asked really good questions.
I don't know if I asked good questions, but you share good information. And actually, most of the interview, I was like, I'm thinking, well, I need to fix that. Damn, which is really awesome. That's great. Hopefully the viewers too, they will take it to their own place. And
Can you put together a checklist of things Baba wants to fix and put it in the description so people can use it?
I might share just what how to say what I maybe like key takeaways or something. I also do the timestamps in the description. Timestamp means
Mm-hmm.
for once people are looking on YouTube, this like maybe like 40 minutes we're on maybe. So they'll
Yeah, yeah.
see a minute number 30. We're going to be talking about, for example, profit loss statement or something. Minute number 22, we're talking about
Mm-hmm.
this and that. So I'll do that as well. So
Yeah,
yeah,
cool
Orion.
stuff.
Cool stuff. Thank you again, and see you here again hopefully soon. Yes.
Yeah, would
All
love
right.
to.
Thank you.
Okay, bye.